Qualifying monthly payment. Use the following equation to determine how much of a mortgage payment someone can afford. Remember your acceptable DTI ratios for the loan program requested. Monthly income times housing expense ratio equals X, if applicable. Monthly income times total debt to income ratio minus consumer monthly debt equals Y. Maximum housing payment is the lesser of X or Y. Here's an example for a conventional loan. A borrower's monthly qualifying income is $6,000. The borrower has a car payment of $300 a month and 2 credit cards with payments of $55 and $100. For manually underwritten loans, the conforming maximum total DTI ratio is 36% of the borrower's stable monthly income. There is no required front-end debt ratio. For a conforming loan, an underwriter may exceed the 36% up to 45% if the borrower meets the credit score and reserve requirements. For an automated underwriting system, or AUS, the desktop underwriter or loan prospector that receive an approved application, the maximum allowable DTI ratio is 50%. Loans that exceed 45% may be considered non-qualifying mortgage loans requiring a special non-prime loan program. The allowable DTI will be based on the loan program requested. What is the maximum monthly payment the borrower can afford on a conventional loan with manual underwriting? In this case of a manual underwriter, we take their monthly qualifying income of $6,000 times 36% equals 2,160 PITI. If the borrower has a high credit score and enough reserves, what is the maximum monthly payment the borrower can afford with manual underwriting? $6,000 times 45% equals $2,700 minus the expenses of $300 minus $100 minus $55 equals $2,245 PITI. If the borrower meets all the loan program requirements and receives an AUS approval, what is the maximum monthly payment this borrower can afford with automated underwriting? $6,000 times 50% equals $3,000 minus the expenses of $300 minus $100 minus $55 equals $2,545 PITI. It is recommended the MLO submit the file through AUS to determine which would be the appropriate answer. When unable to submit to AUS, the MLO should use the expanded calculation if the borrower meets the program eligibility for DTI and reserves. Otherwise, use manual underwriting limits. As shown in this example, when borrowers can achieve an AUS approval, they will have more home buying power. It's important before an MLO provides a borrower and their realtor with pre-qualification, the borrower qualifies for the loan program and meets the requirements. This example shows a range a borrower may qualify for and the expertise of an MLO to make the determination.